Renewable energy stocks have gone absolutely crazy this week, whether you're looking at asset owners, component suppliers, installers, solar companies, wind companies, everything is going up in value. And there's a really good reason behind that. And that is that interest rates are coming down. The Federal Reserve said on Wednesday that they expected interest rates, at least on a short term basis, to come down in 2024 and in 2025. So the bond market, which really sets the price and the benchmark for how projects are financed, actually pushed interest rates lower as well. The 10-year rate fell pretty dramatically both Wednesday and Thursday. I'm recording as of Thursday. And as those yields fell, we saw the value of a lot of these renewable energy companies rise. So I want to get into today exactly why that's the case, why interest rates are so important for the renewable energy industry. Because if you haven't looked at this before, this really is the fuel behind the entire industry. No matter what company you're looking at, you're going to want to understand how projects are financed. So that's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to start by going through an example because hopefully this gives a little bit of context to how interest rates play a role in energy projects. And what I'm going to do is use an example of a $1 million project. So that's the cost of the installation of the project. And we're going to keep that flat throughout because that's going to be a proxy for a utility scale project. It could be a proxy for a rooftop project that you're putting on your roof. The cost of installation is not going to change all that much month to month or quarter to quarter. So in this case, we're going to say that the cost is $1 million. We're going to say that revenue is $100,000 per year for 20 years. And that's the only income stream I'm going to consider in this. We're going to make this a very simple model as opposed to considering tax benefits and things like that. When calculating the present value of those cash flow, I'm going to start by discounting those at a 5% rate. And what we get is that the project value or the present value of that $100,000 for 20 years is $1.25 million. So if you are a project developer and you say, does it make sense for me to build this project? I have $1 million in costs. I have a project that will be valued at $1.25 million when it's completed. I'm going to make a profit of $250,000. Yes, that is a project that makes sense. But what happens if interest rates go up? And that's the next example here. The only thing I changed about the assumptions in this is the interest rate or the discount rate. I moved it from 5% to 8%. And when you do that, it reduces the value of those long-term cash flows. So the cash flow that comes in year 10, 11, 12, those are going to fall in value. They're less valuable today than they were when interest rates were 5%. So now the project value when it's completed is $982,000, but the construction costs didn't change over this time. So as a result, you end up with a negative $18,000 in value. So this project makes absolutely no sense to build. And this is really what the industry is dealing with right now. As interest rates rose over the past year and a half, it put a lot of pressure on the financing behind a lot of these projects. So if you're a residential solar installer, which are going to have some of the shorter lead times between signing a project and actually building a project, you're going to see this the most quickly because your costs are going to go up and your margins are going to get squeezed. That's why you see SunPower, Sunrun, and Sunnova be some of the most quickly impacted by the rise in interest rates. And they all said that both volumes are going down because there's more projects that don't make sense, just like this one that I gave an example, and margins are coming down. So even the projects that do make sense aren't as profitable as they would have been previously. So it's kind of a double whammy for them. And that's why we've seen those stocks fall as dramatically as we have in 2023. For financing companies, and the one that really took a hit this year was NextEra Energy Partners. So they're a financing company, a subsidiary of NextEra Energy, and they're going to take out some debt and use some equity to buy projects. A lot of those are utility scale projects, but it's wind, it's solar. They come with long-term contracts, but the contracts might be 20 years, but their debt isn't necessarily 20 years long. So they're going to have to refinance their debt over a period of time, whether that's on a project level or at a corporate level. And what investors saw is that there was basically this cliff of about $2 billion in financing that was going to need to be done in about the next 2 years. And if that was going to need to be done at an 8% interest rate instead of a 5% interest rate, you see this dynamic that I talked about here. Suddenly you go from having excess cash flow, which you can use to pay for dividends, to needing to use funds because you're basically losing money on those projects. So that's why that stock got hit so hard. But it all comes back to interest rates and discount rates. And that's why the industry has had such a bad year in 2023 and why there was such a positive reaction to the Fed's announcement this week and the projection of what interest rates will look like in 2024 and 2025. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So hopefully that makes a little bit more sense why the installers and some of the finance companies have been the hardest hit in 2023 by rising interest rates. But that doesn't mean that they're the only companies affected. You've seen the drop in Enphase Energy, in Solar Edge, in all kinds of companies that are providing inverters, batteries, racking, any sort of components to any of these installers, because they're downstream from all these effects. When SunPower or Sunrun says, hey, we're not going to install as much solar as we expected to later in the year, they reduce their orders for Enphase Energy or for Solar Edge. And when they reduce those orders, they're even starting to put pricing pressure. So there are a few dynamics that are going to take place even if interest rates are lower in 2024. And this is what I want to highlight for investors because this is what I think we should all be watching. The first is that there are increases in utility rates coming in 2024 and 2025. And that is a function of utilities investing and passing those investments on to a lot of their customers. So this is most evident in states like California, where you already have a high rates, and a lot of utilities have asked for double-digit increases in those rates. But we're seeing this across the country, and interest rates have an effect on that because utilities do have to borrow money and generate a return on their assets, and that's a little bit tied to interest rates. The second thing is that component costs are expected to come down. So this is everything from solar panels to inverters to batteries. Sunrun gave a really good explanation of this and how they see some of their component costs and their costs overall coming down, and basically said that, hey, we're not going to be installing as much. We're not generating as much margin. We need to put pressure on our suppliers. And so we've seen that through those installers. SunPower and Sunrun would be the two big ones to talk about. And they're going to put that pressure on their suppliers like Enphase and Solar Edge. So we heard that from those suppliers saying, hey, we're not going to have the same volume. And we're even going to see some margin pressure as our customers, who are the installers, start to put pressure on us. So those two things are going to kind of collide. The higher utility costs are going to be good for the competitive dynamic for rooftop solar, especially against those utility prices. That's what most customers are going to compare it to, but they're also expecting to generate a little bit more margin because of those lower component costs. The Fed is also expecting inflation to be a little bit lower and labor to be a little bit less of a pressure. So as installers, you're working in the construction industry, and that's been plagued by higher labor costs because there's just been a lot of demand on the industry. So that could actually help a lot of those installers. Again, doesn't really help the component companies or the product companies. And then lower interest rates. Like I mentioned, like I started this video with, those lower interest rates are really going to be a tailwind behind everybody. So hopefully this lays out some of the dynamics that are going on in the industry today. Most of the companies that are publicly traded are going to be in the solar industry in one way or another, whether they're installing rooftop solar, providing components to the industry, installing utility scale projects, which are going to be a little bit longer lead time. But understanding these dynamics and especially how interest rates play into the industry is really important. This is why something like the Great Financial Crisis wasn't actually that bad for the solar industry, because interest rates came down dramatically. So they really benefited from that. Ironically, if we go into a recession in 2024, 2025, and that drives interest rates lower, that could actually be benefit to a lot of these renewable energy companies. So that's a little bit counterintuitive, but that's the way that it works because you're doing such long-term financing. It's a little bit like a mortgage. When interest rates go up, it makes that home more expensive. And unless the seller is willing to lower their price, which would be the same as the installer getting lower costs for their components, then you're kind of at a standstill. So interest rates are very important for the renewable energy industry. If you have any questions or comments, leave those in the comments section below. I'd be happy to answer those. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.